Hi there, folks. Welcome to today's episode of the Chaikin Minute. I'm David Shulin. In today's video, we are going to discuss trends and industry. You find them in the top right corner of all of your stock charts. Trends, strong or weak. Industry, strong or weak. And we still find them on ETF charts, although we are missing some of the data, and there's a good reason for that. I want to talk about this trends indicator and this industry indicator, what it means, where it comes from, so you can have a better understanding of how it can help you. Keep in mind the trends and industry items that we see in the top right corner of the chart are also part of our checklist, right? Industry strength matches what we are going to see in the top right corner of the screen, weak or strong. And we do see trends similarly in the long-term trend here in the checklist. It is not exactly the same, right? The long-term trend here in the checklist could stay strong, neutral, or weak. The trend up here in the top right corner is less complicated. It says only strong or weak. Those are your only two binary choices. The industry indicator here is exactly the same. So what does it mean and where did these come from? Well, let's start with trend. We can see that PKI is listed as a strong trend. And I can tell you right now that every stock that has a bullish rating is going to have a strong trend, because that strong trend means that your closing price was above this long-term trend line, this orange line here. Stocks that are below the long-term trend line on a closing basis would be weak trends. And I can tell you that every single neutral plus stock is going to have a weak trend. How do I know this? Well, for a stock to have a bullish power gauge rating, it must have closed yesterday or the previous day's trading above the long-term trend line. Any stock that would be bullish based on the 20 factors that make up the power gauge rating, but has closed below that long-term trend line is no longer bullish anymore. It is neutral plus. So every bullish stock does have a strong trend here based on this trends indicator in the top right of the chart. Every neutral plus has a weak trend. Neutral stocks could be either. I have no idea when I click on these neutral stocks what we're going to get, but it's easy. Below the long-term trend line, weak, right? Below the long-term trend line, weak. Above the long-term trend line, strong. That's simple. That's simple. Now, when it comes to ETFs, whether or not the ETF is above or below the long-term trend line is not what changes it to neutral plus. That is the rule for a stock. For an ETF, there is some persistency calculation in there. ETFs generally are not as volatile as individual equity positions, and they tend to live around the long-term trend line. So the rules are a little bit different. So you'll notice XLF here still has a bullish rating, but it is below the long-term trend line and it is still weak. So again, the rule for the trends up here is the same for stocks and ETFs, above or below the long-term trend line. That's it. That's simple. That's simple. And of course, with bearish rated stocks, by and large, these will be weak trends. You could technically be above the long-term trend line, but have it falling and still be listed as bearish. But yeah, here you go. So here's an example. ED is above the long-term trend line, but it is still bearish because that long-term trend line is falling. It is a strong trend, though, here for this indicator. It is a strong trend for this indicator. All right, what about industry groups? How does this industry group indicator tell us weak or strong? Where does that come from? This comes from the power bar for the industry group the stock is in. So right now we're looking at Consolidated Edison, right? The industry group Consolidated Edison is in is multi-utilities. So this is telling us that the multi-utilities industry group is weak. How is that calculated? Well, we could click multi-utilities right now This would be one way to show us. How have we determined here at Chaikin Analytics that multi-utilities is a weak industry group? It comes from the power bar right here at the top of your list. We look at the number of bullish rated stocks and the number of bearish rated stocks inside that industry group. We ignore the neutrals. We ignore them. In this case, there are more bears than there are bulls. As a matter of fact, there are 0 bulls in multi-utilities. So when there are more bears, this is a weak industry group, a group as a whole that is more likely to underperform the market in the months ahead. This is the same for every industry group. And by the way, industries is listed, of course, here in your list panel, right? These industry groups are ordered by the power bar ratio. We'll talk about using the industry groups here in this list panel in the future in another video, but the industry group here in the top right corner comes from those power bars. Every single one of these stocks is part of the multi-utilities group. I already know that every one of them is going to say weak industry, right? Much the same way that I know every one of these in consumer finance at the top of our list here is going to say strong industry. You know it automatically. And that will match up perfectly with what is listed here for industry strength as well. Hope you've enjoyed today's episode of the Chaikin Minute. We'll be back with you tomorrow.